MACD indicator is one of the most important indicators used by institutional traders. It is composed of 4 components. We have the MACD line, which is 12-period exponential moving average minus 26 exponential moving average. We have single line, which is 9-period exponential moving average. We have the histogram, which represents the distance between the MACD line and signal line. If the distance between the MACD line and signal line is large, we have larger bars of histogram, which indicate high momentum. We also have the zero line, which acts as the axis. These components close with each other, giving us bullish signals and bearish signals. The bullish signals occur when the MACD line close above the signal line below the zero line. This is a bullish signal. And when the MACD line and signal line close the zero line from below to above, this is also a bullish signal. On the opposite hand, when the MACD line close below the signal line above the zero line, it is a bearish signal. And if the MACD line and signal line close the zero line from above to below, it is a bullish signal. So we have bullish signals and bearish signals, and you have to understand them very well because we will explain these signals in the next slides. You cannot depend on MACD indicator alone to buy or sell because you will end up losing money. You have to combine multiple strategies into one. You have to have a full system. That's why in this video we use the 100 exponential moving average along with the MACD to survey the market and to find areas of crossover. Then we will start by analyzing the price action and price patterns. And by analyzing price action and price patterns, we will find areas of reversal. We will look for volume, we will look for fundamental news if possible, and then we can buy or sell. So in this video, we will master using MACD indicator. Here the price was trending upward, and we started to see a crossover between the MACD below the signal line, which is a bearish signal. So we wait for the price action pattern and the trend to be broken. We want the price to create lower high rather than creating higher high. And this will tell us that the trend is getting weaker. And as you can see here, the price created lower high, it created a head and shoulder pattern. And the neckline was broken along with the 100 exponential moving average. So we have a crossover, the MACD line and signal line closed below the zero line from above to below. And we have previous crossover between the MACD line and signal line. So we define our pattern. We draw the head and shoulder pattern, and as you can see here, we have a neckline. The neckline must be broken along with the MACD signal to be sure of the price. You don't trade the MACD alone. There is no such thing, and you will end up losing. And the neckline was broken with a high volume. So if the price went down sharply, we wait for a retracement. If it went down slightly with a high volume, we can sell at the same time. I want from you to wait for a confirmation candle. You put your stop loss above the swing high so that it will be protected. You put your take profit short from the next support zone to avoid any rebounds. And now we have multiple signals. The price is below 700 exponential moving average. The price has a shift in the price action and the trend. The price has a signal from the MACD. So the MACD indicator is important in understanding and surveying the markets. You put it in multiple charts, you start to survey the market, and the crossover will tell you that this is important area. Start to make your analysis. So as you can see here, the price started to rebound from the support zone, and that's why I tell you to make your take profit short from the support zone to avoid any rebounds. Here we have a MACD. The MACD line went below the signal line, which is a bearish signal, and they crossed the zero line. The price also went below the 100 exponential moving average, which is also a bearish signal. We have a pattern, double top pattern, which is also a bearish signal. And we have broken 100 exponential moving average. The price went down below the 100 exponential moving average and retested and rebounded from it, which confirms the downtrend. So we have multiple signals and confluence that confirm our trade. So we sell because we have a bearish signal, we have a double top pattern, the neckline is slightly broken, it went down to moving average. So we sell and we set our stop loss above the swing high and above unhandled exponential moving average to be safe. As you can see here, the RSI indicator went to the oversold zone near the 30 band, which is a bullish signal. We have also a crossover between the MACD line and signal line. The MACD line went above the signal line, which is a bullish signal. The MACD and signal line crossed the zero line, which is a bullish signal. And we have the price line to break above the 100 exponential moving average, which will be a bullish signal. And as you can see here, the price resists the resistance zone and try to break above it. Once the price break above the resistance zone, we will have candlesticks with high volume, with higher volume than the usual. And this will confirm that this is a valid breakout. And once the price break above it, we can enter or wait for retracement after a big move, and then we wait for confirmation candle, and then we enter. We put our stop loss covering the most recent swing low to protect our stop loss, and we put our take profit just close to the resistance zone, but short from it, to avoid the rebounds which may occur near resistance zones. So we wait for the price to break the resistance zone so that we have a better chance that the price will go up, because the resistance zones will be support zone. And as you can see here, the price went up. It has a slight retracement, as I told you. So in most of the times, it will retrace 30% or 50%, and sometimes it will not retrace. But here, in this case, it came back to the moving average to test it. Then it went up. So you have multiple chances to buy, and you have multiple signals to buy. You have the RSI signaling that this security is oversold. You have the MACD signaling a bullish signal twice. Once the MACD closed above the signal line away from the zero line, and once the MACD and signal line closed the zero line from below to above. You have the price breaking the 100 exponential moving average. You have the price breaking the resistance zone and turning the resistance zone into a support zone, and you have a confirmation candle with high volume in the direction you want. In the bullish direction, you have clean candlesticks. So you have multiple signals, you used multiple strategies, and you set your risk to reward ratio at that amount, and you set your stop loss covering the support zone so that if the price went down to retest it, it will bounce up. So we have used multiple strategies, just as I told you in the beginning of this video, and we have managed to master the art of using the MACD indicator. We will also choose a video from the comments below, so write down what video you want, and don't forget to subscribe for more videos.